The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the 13th of February. And what we're looking at right now is a market that started off looking horrible. Futures were down over 100. The Dow dropped, the S&P dropped really sharply. And lo and behold, what did we see? The buying pressure that I told subscribers we were going to buy this morning came in. And all I can say is that there are certain clues that we are, in my opening call newsletter, we are trying to follow these as strictly as possible. Let me tell you, it's not easy trying to get rid of all the noise, trying to look for the exact, right, correct identification signals, and to maintain the discipline to stay with them. If we're wrong, we're wrong. That's all there is to it. But you just, I cannot believe that the futures a week ago were down just over a week ago, were down so sharply with the volatility index screaming to the 21s and then plunging to the 14s. That, to me, is telling a story of internal buying. If wrong, the futures will start to go down again and the volatility index will retest today's highs. Well, let's run the numbers quickly, and then I can go through a whole bunch of things that I believe are very important. I'd also like to look at some of the commodities. This being Thursday, you've got Larry Pesavento coming on after me. That should be a great show, looking at all these different. He looks at the futures on a Thursday, much closer, and he also looks at the commodities, and also then you've got Andy Hecht doing the same thing later on. So I'll do it in my way, just based on the Chapman Wave methodology. I hope I'm going to, where's my notebook? We've got a little juggling going on around here to try to organize things in a slightly different way. And as a result, I'm trying my best. Things are placed in a different area for various reasons. Well, let me do this. The E-minis are trading at 1818.25, having made a low today of 1802.25. That is 16 points to the upside in a mere 1.5 hours, number one. Number two is, besides doing that, this is a very powerful leg A. The MACD, on the daily chart right here, look how the MACD, the beta, the distance between the green line, the fast-moving average, right there, and the red line is notable. It is prominent. You can see there's a wide white space between there. That distance is telling you that the pressure on the buy side, and the green line very often follows the actual price. That's the fast-moving average of the MACD, moving average convergence divergence, follows the price, and it's done that sharply. There's no divergence there, number one. Number two is the stochastic has gone straight up with a fast-moving average, not even approaching the slow-moving average, the green above the red. At 72%, it's not at 80%. So if we take it out today, I'm not sure we can do that. That is yesterday's high of 1823.25. Let me just type that in. So I didn't put it in. I'm going to put it in the 120-minute chart. 1823.25. Yes. If that gets taken out, and I'll put it in red because that theoretically was a sell signal, to a sell mode in the 120-minute chart, that can quickly change from a trough C back to a buy signal, or just get negated altogether. And if there's a brand new high above 1823.25, yes, I have to call that E for now, but it's very positive action. Now, if it happens today, that extends leg A, and that is very powerful. I will have to put an up arrow instead of the plus sign. And that would imply that I'm anticipating leg A to peak A, leg B to peak B, leg C to peak C, and then leg D to peak D. Now, by the end of the day, the day is young. Anything can happen. By the end of the day, if there's a reversal and the E-minis close right down at about the 1806 level, it's at 1870, between 1809 and 1806, that'll be a give back of a huge chunk of the gain and say, hey, now you've got to be careful because 1796 is the 9-period exponential moving average. You close decisively below that, and then the technique that I call a single leg A up phenomenon comes into effect, and it says, be careful. You can go straight up and then straight down if certain factors are involved, and that would imply that the stochastic reverses down sharply. It hasn't done so yet. It implies that the MACD the fast-moving average will turn down, and the price will close decisively and strongly below the 9-period exponential moving average. Just wanted to set that in place. Now, there's something else that's going on. Let me just draw this for you. Two lines can make such a difference. I'm going to show you two lines in a moment. I almost forgot about that. Look at this. Two lines right there. And those are parallel lines. And what we've done is we've broken above it. If that's the case, if this is a Chapman wave falling axe breakout to the upside, you've got yourself a 1-to-1 expansion to about 1825 to 1827. So we'll just do one step at a time. I love what's going on right now. As I say, we were waiting for a pullback this morning. I should have got two particular different sectors long. We took one. It's working out really well at this particular point. I should have had the courage just to take, as I had yesterday. We wouldn't have got the price, but I should have put it in. Now, for my subscribers on my opening call, I'm going to mention it now, and I hope I mention it again by the end of the show. I will be doing a very rare update. I don't know yet what I'm going to do. Normally on my updates, I actually try not to do anything. I found over the years I'll make a big fuss about an update because of the big news that's happening. And the very next day, we could have got the same trade at an even better price, up or down. Once, in fact, I found an email the other day from someone, once back in March of 2008, I think it was. I had an intraday update, and we bought the DXD, the 200% short, the Dow, and it worked out for a really nice, strong 11 points to the downside. That's one of the best times I can think of. So I don't make a big deal, but this is a little different because there are some stocks that are acting very well enough that I would like to consider them at least. So now look at this. If you go from the E-minis, let me run the numbers. The Dow is up 8 at 15,972. The S&P is up 2.21 at 1821.47. The comp index is up 14 at 42.16. Gold. Now, this is very interesting. Gold just refuses to go down. It will, but right now it's up 240 at 1297.40. Silver is down at 2 cents at 20.32. What happened to my water? Everything's in a different place today. 20.32. I'm going to pour this water out. Right. There it is. Bubble toilet trouble. And grab a sip. You'll be able to see the sip of water. Good. Now I'm back. So we've got gold is up, silver's down a fraction, platinum's up up 0.75 at 1407. Now, high-grade copper is giving back some of the gains of yesterday, 3.23. I can't help it. I have to go to high-grade copper right there. Go to continuous contract. I'll get rid of the 120-minute chart. Let's get that out there. Whoa. Where did it go? I did not want to lose it. Is that the 120-minute chart right there? It better be. Uh-oh. This is not good. Uh-oh. Hey, where did it go? Oh, it's up here. When you make changes, I feel for Larry Pesavento. I understand exactly. I mean, I spent another 2.5 to 3 hours yesterday Sarah from Trade Station. She's been fantastic. She's found a whole bunch of things going on. I believe that I got to go. Oh, I forgot to call. Oh, I can only call after my show. The driver. I got to go for the driver of my mouse. That might be one of the big problems that I've got. The driver of my mouse. High-grade copper is trying to rally. It's making a peak B right here. It's okay. I just think it's in the trading range. It's kind of stuck, just like the TLT, which is trading right now down. Oh, it's up 48 cents. Stuck in the weekly chart and kind of a sideways action here. And so the TLT is up 49 cents at 106.41. Really important to hold the 105s. That's all I'm saying about the TLT, which is the Lehman 20-year T-bond fund. Let's go on. We're going to look at the dollar right now. Let's look at the euro. I said I'd like to do a few of the commodities right now. EUR, USD. Acting quite nicely. The euro is bouncing a little bit. Leg B, same as copper. Leg B after quite a deep pullback. The dollar is right now at, DXY is, this is a dollar continuous contract. Trades very close to the actual futures contract. Whoa, looks bad. Very important. What I said the other day was on the upside, it has to just break into the 81s. And it has to do that soon because the way it's acting right now, it looks like it wants to test 80.15, the low of the 24th of January. If it breaks that, then the weekly chart is going to just make the H that goes to an M pattern, and it'll go all the way down to the 79s again. Not acting great. Now let me just see. What am I missing here? Did the euro? I did those. Now let me just do a few things here. I just want to show you. This is soy. This is the continuous contract of soy. Soybeans continuous contract in leg C in the daily. It's acting very well, and I think that it's going to go higher. Right now it's in leg C. It should go to at least a D. But the big thing was the challenge in the continuous contract was to break above the high of the week of the 13th of December at 1340. It's done that today, and that is a positive. It says, I had spoken about this before, that there's a really good chance that the peak C in the monthly at 1391.5. I'm talking continuous contract, also very close to the actual futures contract. I think that's going to be taken out. But what's happened, and I'm finding this absolutely fascinating, is that there was a period where they were actually going, just for a moment, when soy was going up, corn was going down. But now corn has made a peak D in the daily chart. The weekly chart is in leg C. And it says it is working its way off the bottom. It's not a fantastic looking chart, but if it can hold here, and if corn by next week can break above, I'm talking continuous contract, can start to work its way, it's at 440.5. If it can work its way to even 444, there's a real good chance we will see, where did it just disappear to? We will see the candle, this candle, a little doji candle with 452.5. At some point in the spring, be challenged. Now, on the downside, a break below 434 to 432 will be very negative. I hear the music, and I have to tell you something. If I hear the music, I got to stop. But the Dow is up 25, S&P is up 3.74. Love to take your calls.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. And Basil Chapman, Tiger Technicians Hour, 11 o'clock till 12 every market day. And 877-927-6648 is the number to call. Dow's up 33. S&P is up 4.5. And we're going to go straight to Jerry in the Back Bay of Boston. I still live in the Back Bay. Hi, Jerry.
Hi, how are you?
I'm very well, thank you.
Yeah, I'm basically a fundamental player, but I bought a stock on a set of circumstances, and I'm wondering how the chart looks. It's called CenturyLink, CTL.
CenturyLink. Is it a communications company?
Yes. There's a huge short position. A bunch of hedge funds got together and wrote up some negative reports and drove the stock down. And then they reported earnings yesterday, and they weren't as bad. And they verified their dividend, which is like 7.5%. And said they may add to their stock buyback. And so I think there's going to be a squeeze going on.
Yes,
and I wonder,
absolutely.
I bought it at $30.50 this morning, and I'm wondering what I should be looking for.
Okay, so two things are going on. Folks, we're looking at CenturyLink. CTL is the symbol. It's trading at 30.85 and 30.84. It's up 65 cents. Now, what's really important about this particular stock, I'm going to just move this back. I wanted to see something here. I did some real quick work. I remember years ago I did this. I just haven't even looked at CenturyLink for I don't know how long, so I can't claim that I'd done the notations before. This is like fresh for me. So there's going to be D there, E there, and an F. Okay, so it conforms very nicely to the Chapman wave methodology. The last move in the monthly chart went from 20.45 back in November of 2008 all the way to peak A, B, C. Now what I do, Jerry, is all I do is I identify the lowest low bar, and then I merely count each successively higher peak, and I'll label.
Oh no, I know your system, yeah, because I'm in the investors group over at MIT.
Oh, okay. You know what? Let me just, before I forget, I'll be speaking there again on the 26th of February, Wednesday the 26th. So
all
I
right,
hope to
thank
see you, Jerry.
Thank you.
So, this is Jerry, who I know. Hi, Jerry.
Hi, how are you?
Yeah, well, I recognize your voice now, and it's all coming back. So this is at 30.83. Jerry, what I'm thinking here is that on the monthly chart, the 200-period exponential moving average at 31.81, and I do want to talk about monthly charts because I know that you look at the big picture. Besides the short and besides all the other work, it's got the dividend, it's got the short squeeze, and it has a technique that I'm looking at both in the weekly and the daily that says I can start to look out a little further, more intermediate term, which is kind of the way I know you like to look at stocks. And that's why I want to introduce the monthly chart. Now, the monthly chart has a level of about 31.80. That's a point higher as the 200-period moving average, which it's been below for 4 months now. Actually, for 6 months, it's gone below. It's closed above once, and most of the time it goes above and closes down. This could be a game changer. Two things are going on. Number one is, so I see here in the den, we've got a fantastic bunch of people in the den. The yield is 7%. Phone company, Omaha, Buffett rumored buyer. Whoa, that's nice to have a rumored buyer. But 32.23 on the monthly chart is really what I want to see, and I want to see it, I want to see it within a week. Let's call it this way because we've got a holiday coming up. I'd like to see it within 8 to 9 trading sessions. I'd like to see it tackling the big resistance in the daily chart at 31.82, 31.81, 31.79, 31.80 for 4 sessions. It just had this tough resistance, and then it broke down and it went under the 9-period moving average. This is just, it looks so much like a short squeeze on the downside where the shorts are pressuring it down. Yeah. There wasn't even one little spike up out of maybe 20 sessions to the downside. Now, this is very important. This single leg A to the upside mustn't just be a short squeeze. There's got to be body. There's got to be buying. There's got to be real veracity to this. I want the stochastic, which is at 76%, to push to the 80%, and it's not going to do that until it can break over today's high, which is a high of 31.25. Right. That's number one. Number two is that only resistance is exactly where it stopped. That was that resistance at 31.25 back on the 13th of January. So a lot of things are working in the favor on the daily. If it broke down, it would buy tomorrow, Tuesday. By Tuesday afternoon or Wednesday at before 1 o'clock on Wednesday, it will have taken out 29.50, which is the 9-period moving average support. If it does that, it says this rally is going to have a lot of testing of the bottom, but it looks to me that $28 is very good support.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. I just wanted to finish. I know that Jerry had to go. He said thank you, but it was helpful information, but I just had a few things to finish. The most important thing that I'm looking at right now, short squeeze or no short squeeze. If you're looking at the, I need to open this. If you're looking at the monthly chart, we've had many moves like this off what looked like a low. What's really important to me is this is the first time we're getting a flattening of the MACD. That's number one. Number two is the stochastics at 12%. In the weekly chart, that's not good enough for me. It's just going to fail again. It really needs to get to the 15 to 18%, and then over a period by next month, it must be in the 20% plus if you're looking intermediate term, and the price should be about 31.50 because there's a lot of resistance in the 31.25 area to the 31.50. It's got to punch through 31.50 and then turn the whole 30.76 to 30.50 area into fabulous support. So far, it's really good. You got a nice entry point. I just wanted to cover that. Now, I had a question, and this is a real good question. Q-Core, which was mentioned in the den yesterday by Ya, I said that it's got a beautiful left side. I don't know if I said it on air because I did it during the intermission, during one of the breaks. There was a beautiful left side, right side price time match. That's one of the techniques that I teach in my CD introducing the Chapman wave methodology. Plus, there was a Chapman wave inside wedge. That technique alone is it's a fantastic technique to be able to develop. And that inside wedge, it really comes from a cup formation or it comes from an arch formation. You see me waving my hands. And that says that within the context of a pattern that is starting to form a U or an arch, when you're coming up to the right side or down to the right side where the lip was formed, either the high or the base, as you're getting close, you should have, way before that, been able to draw a trend line that took you to a confirmation of which bar to use. In this case, I use a perfectly good midpoint for it, but sometimes it's a plumb line. I call this the plumb line, one of the techniques that I love to spend time on in my Master Trader series, talking about what in the middle or close to the middle or what candle could supplant the exact low that it might eventually turn out to be, but you don't know until you get to the right side. In this case, it missed an exact left side, right side price time match by 1 bar in the daily chart. Q-Core is the name. Quest Core Pharmaceuticals, QCOR is the symbol. I keep saying Q-Core because that's the symbol. And it's trading at 69.55 up 5. But it's right here where the previous left side high of 70.17 was back in October the 29th. Of 2013. So this is going to be a little bit of resistance, plus you've got the inside wedge resistance. Wanted to point that out. It's part of the technique. So expect that there could be a little bit of a digestive phase here, but I've got it as gray leg B in the weekly chart. If it breaks above 74.76, I will rename it D/whatever it is at that particular point. So I'm going to just draw this in and have it all ready, so if we ever look at it again. So you really want to know what the support is, and the support is between 67 and 66.59. 66.59 is a 9-period moving average, but it could even pull back to 65.41, and then it takes on a different chart formation, which says it could take a little bit longer if it doesn't within 3 bars of pulling back to the 66.60 area. Immediately try to go to the old high of 71, round number, which was made today. So that's the old high, but not the all-time high. All-time high is 74.76, made in that. I'm calling it for now a right arm extension peak F top. But I have to tell you, none of the techniques that I'm looking at within this say that it's really a peak F. It looks more like it's A, B, C. It's F/C, and it's going to have a D as Q-Core Pharmaceutical, Quest Core Pharmaceuticals breaks above 74.76. Now let's go to the LB, which I haven't looked at in a long time. This is lumber. LB lumber. Why am I not getting it? LBH. Let's see what happens there. LBH is in leg C coming off the bottom. I was asked if I would look at some home builders. I think this fits in perfectly because, oh man, I must be able to get LB. I did so much work on that. Lumber is LB at LB there. What is going on? Couldn't have changed. Lumber, lumber, lumber. All right, I'll have to figure out what's going on there. But in the meantime, let's look at the dollar HGX, which is in fact, there we go, Philadelphia Housing Sector Index. Now this, one of the reasons why I wanted to go long this morning, and all the analysis I did said that there was a really good chance that we are not making a major top at this particular point, that we're going to do some retesting to get to at least test towards the highs that we just made over the last couple of days in some of the indexes, is because I was looking at strength in some of the home builders, not all, but in some of them, looking at strength in the HGX, which is the Philadelphia Housing Sector Index, in leg D yesterday. If it doesn't go above 205.13 today, it's peak D, but a high-level consolidation at 91% in the stochastic. And having just made a peak D recently, it says, boy, if you break out from here in a Chapman wave cup and ladle pattern, also in my CD introducing the Chapman wave methodology, above 204.78, but you slice right through it, you could extend quite a bit higher. That's number one. Number two is that the weekly chart starts leg D at that particular point, and that's really important. And that means that it goes through that, and then 210.01 is that whole area of 208 to 212. That whole area should be very strong resistance, because if it powers through that, That's really positive. So now I'm not sure if I'm hearing the music in the background because I've got double sound. And the Philadelphia Housing Sector Index monthly chart has made a peak E, and this is a very strong retracement. Look, every candle has been pushing towards the 210 level. I like what I'm seeing. Now, I said that I would do a couple of different indexes. Maybe it is music, maybe it isn't music. I'm not sure. No, it's not. Thank you, Al, my wonderful engineer, keeping me appraised of what's going on. This is a powerful leg B in the weekly chart. There it is, B, A, right there. But look what's happened in the daily. The daily's got a gray A right there under the previous high, gray B, and now it's E/C. I have to tell you something. At 91%, the daily gold chart is looking really strong. And that helps the weekly. And, of course, the monthly has that, it has that very strong resistance. It hasn't been able to break above since it closed above it back in September of 2012. Remember, the all-time high was September of 2011. So I'm anticipating that the H, just like it did before, is going to go to an M pattern, and that the 9-period exponential moving average around about 1315 on the continuous gold contract is going to be tested. Very impressive action. And two things that are absolutely noticeable is, one, that the support now is becoming 1276. It's at 1297 right now, up to 90. And that's 1276 is on the daily, and 1260 is on the weekly. And my suspicion is that if it does have a pullback to that level, it'll give us a great buying opportunity if it is within the next week and a half. If it's in 4 weeks' time, I'd have to consider that maybe the rally is over. I don't know yet. But that's the way I'm looking at this. Shorter term, it's looking great. Now, there's something else I wanted to do. I wanted to also look at, let me look at these different things. I wanted to look at KC. You remember I was looking at KC and said high-level consolidation acting really well, holding the 9-period moving average. Love coffee. Coffee is, well, I drink it periodically, but the chart of coffee, monthly is very strong leg A after a silent doji candle off the low. I have to move this because it's continuous, so the price keeps changing. It's in a very powerful leg D in the weekly chart. It's coming up to resistance, and that resistance is in that candle with 147, May of 2013, week of May the 24th. That candle right there, we're getting real close to it. That's going to be some kind of a resistance area, and that's maybe about another 2 to 3 points away, 2.5 points away. So I love the action right now. Daily's acting very, very well. I said I'd also go to cocoa. Cocoa is in leg E in the daily. The weekly is in leg C. Monthly is in a very strong B. Like coffee, it's acting very well. High-level consolidation at 2.956. Remember, I'm looking at the continuous contract. Says that a high-level consolidation could come in around about 2.930 to 2.9. So that would be the pattern. And actually, what could happen, it could create the stalk leg formation by making an oval pattern, and that oval pattern could continue into just a trading range, not going that much higher in the shorter term. Why is this not giving me what I want? Hey, I don't like messing around here. There you are. All right. So there it is. This is a strong leg up. Well, it's a few legs up, but in the stalk leg formation, strong leg, making the oval pattern. Going to watch it real closely because 2.930 will be strong support. And if it does break out, it's going to break out very sharply and go above 2.984. Wow. Okay, so that's cocoa. And then I wanted to look at sugar, SB. So sugar had a monster, like many of the others, had a monster pullback. It held above the 200-period moving average in the monthly chart. Weekly chart, it's got a nice action, strong leg A, then it gives it back, but that's the first time it tried to get over the 9 EMA. You expect that when it's the first time. Now what I'm looking at is that sugar is in a trading band, 16. This is the continuous contract, so it's at 1563. 16 is going to be the level to break out on the upside, so you can retest the recent high on the 4th of Feb at 1638. But if it breaks under 1531, the low of yesterday, that's not going to be good. That's going to be that A, single leg A, Eiffel Tower pattern that looks just like this, like an uppercase A. And normally what I do is I go like that. I shoot for the biggest pica, and there it is. So that's the pattern you've got to be careful of. If sugar's going to fail, if coffee's doing well, sugar should do well. Well, if coffee's going to fail, it'll break underneath 1531, and it'll come all the way back, like the Eiffel Tower. So now, I need to look at a couple of things that to me are very important. The VIX index. Made a big deal about it before, going to make a big deal about it now. Spikes up today, opens at 1524. The high is 1524. And then what does it do? It pulls back. It's back to 1415. That is buying pressure. Let's try to keep it as simple as possible. Hey, I want to go to Frank in Lexington, Kentucky. Frank, how are you? Frank, you there? Frank might be listening on his computer. There's a little delay. Frank, you there?
Yes, I am.
Good.
All
You'd
right.
like to look at?
J-O.
Okay.
And I'm in Massachusetts with you getting snowed on here.
Oh, wait a minute. I go Lexington, Kentucky. You're in Lexington, Massachusetts.
Right.
Oh, man. It's still coming down. It's going to come down all day. Of course, early this morning, my little Florence Nightingale wife went off to work just like in 1978 with the big storm. She and Governor Dukakis were the only ones on the road. But that's the way it is. But I hope she's able to get back tonight. Important day tomorrow. So let's see. We've got, well, Frank, I'm going to ask you to hold on. We've got a break coming up. You want to look at JO. Are you holding it long?
Yes.
Okay, so you've been holding it for a little while. I love it. It's a high-level consolidation. Give me a moment, and I'll be right back. I think we've got a break. Do we have a break coming up? I got these sounds coming through here. Al, just put a yes for a break or no for a break, and I can go on. It's coming up. I can see it. I can see typing in just a moment. Okay, so we're looking at JO, which is the Dow Jones iPath AIG Coffee ETN. I'm just going to say to you, this high-level consolidation could form a rectangle formation. That's number one. And now, because it's taken extra 2 days to break out and it hasn't broken out, my thinking is that on a very short term, 2874 is a high, and that 2695 will be the key support to hold. My eye is telling me that even on the 120-minute chart, that this is going to be pulling back, and it's going to be pulling back to the 2642 level. Do you have enough positions that you can take something off and then put it back?
Sorry.
Then I'm going to recommend you don't have to jump to do it, but think about what you really want to do in your overall plan. But if it was my opinion, I would take a little bit off at 2761, even though it's only a point, and I'd wait for a pullback, because if it breaks out, you still have your core position, and you can always put that back on the next dip, because that'll be a very positive thing. But my feeling is that, in fact, you don't even have to take anything off. You can just say, you know what, if it takes out 27.29, the low of yesterday, take a little bit off. Let's look at it again maybe Tuesday of next week. I think it'll be pulling back for about three days or so. Thanks so much for calling, Frank, and let's hope that the weather is going to turn beautiful.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back, and I've got a question of the day which I'd like to get to, but no. First, we've got to get to Brent in Martinez, California. Hi, Brent. How are you?
I'm doing great, Basil. How about you?
I'm doing well, thank you.
I'm calling to congratulate you on your great call on Ion Geophysical IO.
Thank you.
I don't know if you saw what it's doing this morning.
Today it's spiked up to 3.97. It's up at 0.81. And this is a fascinating thing. It formed a W-shaped base, and that base allowed it to see much stronger technicals, as especially the last trough C was forming. And what's happened now is that you've got yourself a pattern in the weekly that says if, and this is a big if, the gap is not filled, going to 323, 324, but instead 360 to 358 is the low for the next 5 to 7 sessions. And even if it just sneaks there for 1 second, it just takes out today's high of 407 and goes to 408, and that would say I'm making the base at this particular point for now, the low of the day of 375. If I do come back, I could have an inside buy signal. It could take me back to the 407 area, as long as, I would say, as long as between 375 and 367 holds on any pullback. So it just touches the gap and then goes right back into today's candle. But most importantly is that the weekly chart, I don't have to tell you, but that is a really ugly monthly chart. But it's got the pattern that I call, man, if I could just draw this in the time that we have, if I could even find it. Where's that staple? What number is a staple? I never do that. All right, I'm not going to find it. But it looks like a staple on its side, which is like a head and shoulders pattern in a way. If this thing can break, it doesn't even have to close there. But any time in the month of February, if it can touch 441, break above the 449 period exponential moving average, that would raise the base and say, hey, there's some substance in IO, which is trading at 398, up 83 cents, up 26%. This is Ion Geophysical Corporation. Now, what's really important about the stock is it does have a tendency to give up gains. So that's why I'm saying be real careful. I don't want you to feel like break 355, then break 349, and then suddenly you're looking at something that had a one-day wonder. So far, this is very nice action. So, yes, I hope that helps you.
It does. Have a great weekend if I don't talk to you, Basil, and great call.
Thank you very much, and I appreciate that, and thank you so much for calling. Folks, let me just do a quick thing. DDD was in the den, DDD. DuPont is acting real well. Oh, my God, DD is acting, look, holding the 9-period moving average. I like the action in the market right now. So DDD has had a terrible move to the downside. The candle of the weekly from last week, I called it the Chapman Wave Roman candle. And this is a little joke. This weekly chart shows the price right there. Once upon a time, that was a peak D before a split. I just think it needs time. I would be very careful about going long DDD, but I would also not want to short it here. I'd wait a little bit more if we can get at 68.63 3D systems, 3D printing objects. I would like to see it get to the 68 right now. I'd like to see it get to 72 to 73-ish, make it an arch formation, and then it might be another short on the downside. We had one fabulous short in this some time ago. We didn't pick up the last one. I know Dave White, I think he got, I'm not sure if he got DDD, but he got one of these with a fantastic gain. Folks, let me just do this. It's really important right now. I know there are a lot of people that wanted to short. I like what I'm looking at. I like the Dow. I like the action today, but the day is young. I need to see the Dow close. It must not close underneath 12,925. No, I'd say 15,950 to 15,930 should be very strong support. If it's able to close anywhere around here, that's very good action. So that's
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.